You got to do the rah-rah.
So what? Good afternoon, everyone. Hope everyone's doing well. My name is Adnan from LPA Properties, and once again we have the delightful Lakhi Singh. How are you, Lakhi?
I'm good as always. I'm going to try and tone it down from last time. I think I did too much bungra last time in the last session about property sales. And I think they didn't put the video out because we had a little bit of too much dance music for too long. I think if you have a tune on, because it's got copyright on it, they banned the video apparently. So I think the last video would have gone completely viral, I think, with all my dance moves. But it's actually didn't even get a chance to get out there. So I think the good news is today's show is being broadcast on about 9 different channels on Lakhi Singh, my main group, and also my other 7-8 groups in Wales and Midlands and London, the Alternative Property Business Solutions community. So we've got the full package now to be able to broadcast everywhere.
Well, Lakhi, you are the man with the connections. But Lakhi, let me take this moment as well, just to obviously say something in regards to a friend of ours that obviously did pass away sadly last week. So to obviously wish her family and give it all the condolences from us as a company. And I think from your point of view as well, she's a very dear friend as well. So yeah, just want to give her condolences to her family and hope obviously that the doors of heaven are going to be open for her.
Yeah, I think yes, unfortunately that's life. I think condolences to everybody out there who knows this young lady. But let's move on, because I think viewers probably won't know who that is. So
no. Well, I'll just give a quick little 1 minute or two just to mention that. But Lakhi, very interesting week from our point of view. And I think the question I want to put forward to you with regards to locations and the best investment areas is 1. 2, what areas up and down the UK are selling and at what price brackets, so to speak. I mean, I know roughly, let's say, what's happening in Mayfair, because we discussed that a bit earlier on, but that's your neck of the woods, so to speak. Whereas I'm in the Midlands, so I can tell you a bit from where the Midland sides are. But from your point of view, from your interactions with a lot of people, a lot of agents within the area of London, what sort of what's the word that's coming out from there and from those ends?
Well, it's not, I suppose, the word, it's probably what's going on the ground. So there's 4 or 5 key things that are happening. Number 1 is that in the media, they're showing that there's been an increase in the number of sales compared to this year and last year. That's actually a 0.8% increase, which is quite incredible considering we're in a furlough situation, a recession, and sort of semi-lockdown. And I believe there's also talk of another lockdown on Wednesday next week in London as well.
Right. Yeah.
So I think we're in unprecedented times. So I'm a bit surprised about the stats. So that's point 1. Point 2, I think certain cities or places where people have got money, there is a huge increase in below the £500,000 mark across the whole country. I think that area, that price point is really buoyant because of the stamp duty reduction. But what surprises me also is that a lot of banks, surveyors, estate agents, as well as mainstream mortgage lenders, are all a lot slower in doing things. So what surprises me that transactions are actually going through because they are not being as easy to roll out their services as they were about a year ago. So the stats actually, I suppose, speak for themselves. The market is actually fairly buoyant, but the question is going to be, how sustainable is it?
Mm-hmm.
So I think that's a big question.
I mean, it's funny that you mentioned that right now, regards to the market being very active and very buoyant. I had a brief discussion with somebody on Wednesday Wednesday's gone, and it's regarding obviously all the online estate agencies, and they are sort of from their end point of view, since May till now, they've been extremely busy, and they've done a lot of business, a lot of sales gone through, but have they actually completed the sale? Because like we just mentioned right now, you've got the conveyance solicitors who have got backlogs. You got the mortgages. I mean, they're talking about introducing 95% mortgage now. I don't know how true that is, or when that will come live. What's your take on that?
Well, I think it's a tough one because what's actually happening and how it happens and the way things happen are two different things. So the possibility is that if we are showing increased sales, it may be about the number of houses that are under offer rather than number of sales that have gone through, completions that have taken place. So my bad guess is that a lot of the stats that are coming out are based upon offers to estate agents and properties that are now in moving into exchange and completion mode. But I may be wrong. But I mean, the interesting thing is that certain part of, let's say, London, like Mayfair, prime central London, has not really been majorly impacted. As I was talking to an estate agency yesterday, and they were saying between below 3 million, it's been a unprecedented amount of activity. And then anything from 10 million upwards to 50 million, 100 million, they seem to be really busy as well. So in Prime Central, I think there's lots of foreign money coming in from other countries where there may be more of a flux and people can't hold on to their money because of COVID-19. So they're probably looking to put it into a stronger market with lots of their own economy in a third world country. There may be a lot more flux in terms of holding on to assets. So that was quite interesting, I thought.
Well, it's again, yeah, what you said about the foreign investors. That's a very interesting topic because, again, with the discussions I've been having with a couple of other agents out there, who are working for prime central London estates agencies out there. From their point of view, what they're suggesting is that from foreign investors to actually invest in property in London is better than investing better than investing in the bank. Would you agree with that, or?
I think if you can, if you know your numbers, because I'm just working on a model for a client where they're looking to restructure all their assets. As long as your numbers work, then you're into profitability. So, for example, certain clients, they've tightened their formula up. They're buying so that they're making a higher yield now. Without that yield, they can't. The yield's gone up from 10% to maybe 15%. And they're also buying assets now where there's very high rental demand. They won't really buy them unless they're 100% sure of a strong rental. And they'll also have a backup rental with the housing association. So I think people are putting in a lot more, being more strategic in their purchases and their exits. So nobody's really buying on a capital growth strategy for the next 5 years. I think a lot of them are buying on a price point that allows them to be in profit on day one. Or if they are going to develop out, they're developing out with a lot bigger margin. They're not buying something with a 20 to 30% net margin on a development project. They're trying to build in around 50% net margin in the outset. So they are buying their development project at a very low cost, or they're buying it with a lot bigger margin because they're buying land and focusing more on getting a planning gain. So they might be buying a piece of land for 500,000, rather than try to make 500,000 profit by spending 500,000 by getting the planning. They're looking to possibly make 2 to 3 million as a gross development value, and then looking to spend minimal to get the plans in. But the NGDV, they're looking at a minimum 50% net margin. So they're working on things which may be a lot more speculative, but have a higher margin, so reduces their risk. So there's a lot of that sort of change of structure and strategy from more mid-tier type property developers that are out there.
What about the buy-to-let market?
So I think the buy-to-let market seems to be pretty buoyant, because a lot of people are now realizing that the property may get distressed in June next year when stamp duty goes. So everybody's getting ready to start buying. So anybody who can't wait to buy that till that time, but they've got their funding ready, are beginning to get their house in order to try and grow their portfolio, or start their portfolio by starting to look at it and doing their research now. So it is gone it has got a bit crazy for the startup type investor.
Okay. Now, but in terms of, let's say, for example, locations, we've mentioned London right now. What other sort of areas would you be thinking or considering for investment purposes with high yields? Would you be considering more up north, or considering right now we obviously got this whole tier 3, tier 2 lockdown measures taking place? What would you think?
Well, I think anywhere there's a lockdown is probably like a good place to buy, because people are I've got somebody, a viewer here, has actually written a comment. They're saying, thank you, Lakhi Singh and Adnan, for sharing the love. I think that's probably come from Carolyn, because I can see that the way she writes stuff. I can't tell in this medium who's writing what. Then another one from another viewer saying, providing value as always, and lots of claps and things like that for us. Thank you. And Sharon Griffiths is saying, really in this market, ABC approach to due diligence is needed. And she's written, I think it depends on individuals' goals, and life plan is so important. So I think, well, definitely, I think anybody's getting into a market now, they've got to do their basic DD, but they've also obviously got to take into consideration now more the market conditions. And yeah, there are a lot of people now whose whole situation's changed. So they have to actually look at their individual goals again, and they've got to reevaluate really what they're going to do based upon market conditions. So people that went into property investment may have had a backup income from their spouse or family, but if the backup income is now in limbo because they're in hospitality and that sector is struggling, then I think you could have you have to actually be quite careful that you've thought everything out with a lot more rigor than before.
Okay, yeah, fine. But again, I think the location has to play a key part, Lucky, don't you think? I mean, in terms of what you can pick up in London, let's say for argument's sake, we mentioned £1 to £3 million are flying off the market right now in central London. surely if you had that much equity or that much abundance of funding, wouldn't you buy it outside of London and you receive more yield?
I think what happens is if you've got quite deep pockets and you're an experienced investor, the London market, even though it's somewhat still volatile compared to the rest of the United Kingdom, it's a lot less volatile. So, but thing is that what you can also remember is London is a very good market for a lot of people to live in as well. So I'm not sure if it's all investment money. I think a lot of it is residential living as well. So I think the advantage you got in London is that it's a bit like buying a Mona Lisa.
Yep.
It's because there's minimal properties in London and availability, and they are high, let's just say high cost, low yield, but they do retain their value. So a lot of people are probably more willing to put their money into assets in London. But the disadvantage you have of moving into areas outside London, that the values may not necessarily be sustainable, and values may fall considerably. So you can't necessarily rely upon vals as easily as you may do in London. But the discussion, myself, I've had a few with senior directors of some of the larger estate agencies, including Knight Frank, Carter Jonas, Savills, these sort of organizations. They're saying that in about a year from now, they don't see the market being as fluid as it is now because of the artificial bounce backs, furlough, Sybils, all these sort of things, giving money to lots of businesses and individuals. We are sort of artificially keeping the economy and the property market propped up. So that would actually be a concern for anybody thinking that they're going to make a lot of money all of a sudden. So I think the real test would be what's going to happen in June next year of the market.
It's funny you should mention about the sort of bounce back loans and everything else. I mean, a lot of, let's say, companies have utilized that in order to, let's say, secure themselves for now. But a lot of this sort of artificial funding we get from governments now, would that have like you just mentioned right now, that'll have massive impact going forward next year? Because obviously there's no repayments now. But when the repayment starts kicking in, that adversely will make sure there's more money coming out of their pockets. Repayments.
Yeah, I think the whole economy is sitting in a very delicate position, I would say, and I don't think it's actually got a chance of actually going up in any way or any massive capital growth for the next 1, 2, 3 years. So anybody jumping in thinking they're going to do really well, they'll do really well if they've got a very clear strategy and they've got an angle on the market. Sharon Griff is also saying in normal times when challenges happen, they are challenging. Nowadays with COVID-29, I think she means COVID-19, it must exacerbate things. She's saying buffers are more important than ever. What do we think? So I think what's going to happen is that anybody in the property or in business, especially if they're starting off or a smaller investor with 5 to 10 properties, they've got to be extra careful to make sure that they've covered all their ground extensively and that they know how to exit or continue their growth in a way that's sustainable. So I was just saying to a client the other day that it's not a must that you need to worry about growing now. You need to think about consolidating. So a lot of people don't understand the definition of consolidation. And consolidation is something which basically means that you reevaluate your whole situation So consolidation is reevaluation. So if you're got 10 different things going on with your property portfolio, one's an HMO, one's a commercial asset, one is a development project, and then one is a buy and hold strategy for a service accommodation. One's a rent to rent. Let's just say you got 5-10 projects going on like that.
Yeah.
You really got to do your numbers, and this is a discussion that I was having with Ninda Singh yesterday morning in our drive time between 8 and 9 that we have every day, Monday to Friday. And we gave 10 key strategies to ensure the success of your business. So the first number one thing he said is that you got to do your numbers. Now, what does that mean? It means that you should be able to look at what you're doing and understand every single numeric or number that exists in your overall structure. So how much you buy your properties for, if you sell them, what's the CGT cost, capital gains tax cost, what's your stamp duty cost, how much are you likely to be making if you so how much are you likely to be making if you're still like if interest rates were to go up. So I would say there's about 5 key factors that people are going to be aware of now. So if interest rates go up, have you got them in fixed rates? If prices go down and you've got investors that have invested in you and they want a return and you're meant to be giving them a regular return, you can't because you can't sell. And you got to be clear about what your exit is, because if you can't refinance because the property prices have fallen, then you've got to come up with a clear plan for your investors, especially if you're joint venturing. Third is if you're not making enough profit to pay back your investors, you're not going to be able to make a profit for yourself. You may not be able to pay your bills. You may actually end up having your house under threat from potential creditors or banks if you can't pay them back. How do you protect yourself from banks coming after you? So all of these things are the things that I work on a day by day basis, and I help people look at doing the basics, and that's why we're called the Alternative Business Solutions Community. And ensuring that you understand the complexities of your doing and the risks and managing them out is quite a simple process. But if once you get caught up in the crossfire of these sort of problems, then it could get quite daunting for people. You know that.
No,
I think it's getting a bit serious now, so we need to probably put things on a lighter note because people are going to start crying about their problems if we continue. But Sharon Griffiths has written some more things here. Let's read it out. She's written, with training, it is important to undertake training to sustain not just for property and business, but for life too. With increasing well-being challenges, PHER facing challenges, I'm not sure what she means. Very often people leave the importance of their personal health out of question. What do you think? So I would actually fundamentally agree with her. What she's saying is, when you got so much going on, you need to sort of understand really what you need to do through training. But you also need to look after your health, because if you don't look after your health, everything else actually could collapse. Yep. So I would say without your health, there's no wealth, because if you're going to suffer from stress or anxiety or getting some form of illness because you're not looking after yourself, then you have to be extra careful in this market, especially with the deadly disease also on the loose. So all of you out there, be careful. I'm sending prayers to all of you for protection. So anybody watching this, Lakhi Singh wants to ensure that you are looked after and you are well.
Good. But you know what? The other thing you mentioned, that health is fine, it's perfect. Yeah, you go well. But then the more, let's say, for example, you're earning from a business, are you in property, you'll obviously encounter more problems. Am I right? Or am
Sorry, I
I
can't hear you a little bit. Just say that again.
So with property or with any sort of business that you're in, the more money you're generating, the more problems you'll face.
Well, if you're generating money, you're probably less likely to suffer problems. But let's just say the more assets that you hold, the more potentially higher risk you are in terms of your exposure to the market. So, if you've got a very good, let's say, high yielding asset base because you bought lots of HMOs or things which aren't affected by COVID-19, then you'd be doing pretty well out of this. But if you've got assets which are reliant on capital growth, or in areas which are, let's just say, poor yield but high capital growth, you might find that there's going to be a fall in your property price more than you're expecting. So property prices could fall as much as 30-40% than what you're going to do. You may not be able to access that capital, and you may not be able to get the capital out that you put into the project 5-10 years ago, because they're going to be the type of financial solutions to get money out of properties probably not that easy. So I think Sharon is also saying poor health costs loss, especially if capacity decreases, and make sure power of attorneys are properly completed. So what she's saying is that if you've got bad health, then do get the right people in place who've got your let's just say your best interests at heart, and they can actually implement things for you if your health is actually not as good. And with COVID-19, you don't really know. So the best thing to do is don't think it can only happen to other people. Anything can happen to anybody any given time. So just have to be extra careful in terms of getting yourselves prepped for any eventuality in this market.
Okay. All sound advice, Lakhi. But now I'm gonna put you on the spot now. So going back to locations, in your opinion, name me top 3 locations where one should be looking to invest, and why.
Okay, if it was me, I'd be looking to invest into, I think it all depends on the budget really. But if you've got ample assets and plenty of money, then I think you can't go too wrong in London, because long term, even if you buy now, I mean, you could probably, if you start looking into London now, you could probably pick up some good deals with a good yield. So in the year from now, if you start researching London now, you've got ample funds. It's a very good area because longer term, the prices will sustain themselves. And if a lot of money does start pumping into London during the recession over the next year or two, then you could do quite well out of it. But I wouldn't advise people to buy straight away. I'd wait for a year to see which way the market turns. So that would be one area, which I think is good, but it all comes down to how well you can buy. I'd be looking to buy something that's worth about 1 million in today's market for about 500,000. But if I'm not getting it for 500,000, then I wouldn't buy it. So, but you really got to be on your game to be able to get those sort of deals. What other areas? I think major cities around England, which have always have demand for rental properties. I don't think you can go too long. Again, you got to buy well, but I think the property prices are still quite high, and I think you probably got to wait about another year again for the prices to soften. But I think if you start looking now, even if you've got a very clear formula and it's been stress tested and you're buying a certain price, you may still pick up properties, odd properties, because a lot of people that are distressed, they're looking for cash, and then if they sell, they'll be able to get quick cash to maybe solve some of their problems. So if you look around now, even in this market, even though it's buoyant, doesn't mean that you can't pick up property deals. So I think South Wales is good, Cardiff, Birmingham is good. I think Dudley is really good, really sort of like happening place. That's because you live there, so they're going to get an extra red carpet treatment. So I think those are the couple of areas that we've got a good feeling about. I think also places like Newcastle, Manchester, Durham, these areas. I think there'll be a lot of activity around there because you can pick up some very good deals. Sharon Griffiths, we're getting a lot of participation today. That's nice, Sharon. She's written Staffordshire. So
Yeah.
Staffordshire sounds good, and Cheshire, which is sort of Manchester, sort of Midlands. Staffordshire falls into Midlands, do you think?
Yeah, Midlands. So it's in between Manchester and Midlands. So you got Stoke, all these sort of areas in that area.
So there we have it. I think a huge list for people to do shopping for their investments. I think we're coming out of time now, aren't we? 31
We are
minutes.
indeed, and I was about to say that as well. So thank you very much, Lucky, for your again great advice and great informative ideas on investing. Thank you very much, guys, for being on today with ourselves. Well, what's that? The property fixer, Lakhi Singh.
So this is
I should have
something I
one for
drew as one
LPA.
of my challenges
All
for
right, okay.
my weekend challenge. I thought I'd do a graffiti version of Lakhi Singh, the property fixer. So I don't think any of the viewers are excited about this. What do you reckon, Sharon? You like it?
Give it a thumbs up.
Sharon's still saying she said she likes handbag shopping. Uh, so I think she's got a good sense of humor. I think, Sharon, we're going to have you on the show. Sounds like you're quite an experienced property developer. So we'll have to find out a bit more about you by getting you onto our drive time one morning.
I agree.
She's
Well done.
saying no, she's not much of a handbag shopper, but she's saying that we're making it probably sound a bit too easy, like you can just go shopping anywhere. But obviously, you got to have a bit of money to buy property or have access to like a quietly, clearly structured fund structure to be able to buy as well. Okay. Anyway, so we'll have to catch up very soon tomorrow for another session talking
Yep,
about
fantastic.
property sales. So we look forward to bringing some more news and updates to all you viewers out there. This is Lakhi Singh, the property fixer.
Thank you very much, guys, as well, for taking part as well. And have a good afternoon. Take care. Bye now.
Take care, guys.